Auto parts, lodging, and an ETF are all in perspective on the top picks list this week. Todd, we're going to start with you. You have an auto parts maker, distributor?
Yeah, Visteon Corp. They are a global automotive supplier to the major OEMs, the major car manufacturers. And when I say global, over 80% of their sales come from outside of North America. So they are definitely global. And if you look at the automotive industry, it's still kind of in the early stages of a recovery, especially here in the U.S. But some industry experts expect 83 million light vehicle sales across the globe this year. That'd be a record high. And that's driven by growth in Asia and a rebound here in North America. And Visteon Corp is very well positioned to benefit from that trend. Like I said, they're a global automotive supplier. They focus on climate, electronics, interiors. They just delivered a huge fourth quarter beat, top and bottom line. Management raised their guidance going forward for 2013, prompted analysts to raise their estimate significantly higher for both this year and next year, sent it to a Zacks rank of 1, which is a strong buy rating. So very good earnings momentum here. Based on consensus estimates, analysts expect 30% plus earnings per share growth this year and next. And if you take a look, valuation still looks very reasonable. They trade about 13 times next year's earnings. That's in line with their historical multiple, about 1.4 times book value. So there could be tremendous upside potential here as long as the global economy continues to slowly improve and those car sales continue to improve.
Okay, Nina, we can always count on you for a good ETF opportunity.
Yes. I'm talking about Mexico ETF today. The ticker is EWW, and I've been bullish on Mexico for quite some time now, for many reasons. Number one, solid macroeconomic fundamentals, an excellent fiscal position, low debt to GDP ratio, low fiscal deficit, very high level of international reserves, very strong currency. In fact, peso has been one of the most best performing currencies in the world of late. And then number two, Mexico is becoming the new China of manufacturing because the manufacturing wages in China are higher than those in Mexico now. Then it is cheaper and faster to ship goods from Mexico.
A lot closer to the U.S.
Yeah, exactly. So many U.S. manufacturers are shifting their production to Mexico. And of course, with the improving U.S. economy, the growth there will get a boost because we consume about 80% of Mexican exports. And the latest reason for being bullish on Mexico is the excellent work being done by the new administration over there, led by President Nieto. Within 100 days of assuming office, he has initiated action of some very significant far-reaching reforms in telecom, energy sector, education, taxation policies, and labor markets. And as a result of those reforms, both S&P and Fitch ratings have recently indicated that there's a possibility of great rating upgrade for the country. And last but not the least, it's Zacks rank 1, strong buy ETF.
All right.
Hey, does that mean we're going to be getting our iPhones from Mexico? Is that what's going to happen? iPhone 6 made in Mexico.
Yeah. Could be. Nice. Never know. So you're in the REIT space. You're kind of like out of your realm. I expected that from Todd.
Stepping on my toes here.
Let me tell you, I like this company. It's Ashford Hospitality, ticker AHT, and they are a REIT in the lodging industry. So it's different than the residential housing that we've been talking about a lot lately. But they kind of focus in on upscale hotels. Like Marriott, Hyatt, Hilton, Starwood, these kinds of things. But they also do invest in mid-scale and luxury hotels and lodging areas as well. But I like the industry. The lodging industry, they are in the top 32% of Zacks ranked industries. And the reason why this is important is because any industry that's within the top 50% of industries really gives the investor a decided advantage. But if you take a look at travel is up. If you take a look at the lodging industry, that has been on a fantastic trend, and I believe Ashford is in a really good position to take advantage of that. So if you were to look at their numbers, they've got double-digit projected growth rates. They've got tiny, tiny valuations. And you can see for the last, I think, like 6 or 7 quarters, their sales have continuously been inching up. What I really like about them, though, is that you can see they have been basing right around this $12 area for like the last month and a half. If they can get through that $12, I think it's like $12.40 or something like that, once you can see a breakout, I'm expecting to see some big things happen. So once you break through that range, I think you get a quick 10% pop. That would put the price at right around $13.50. But longer term, over let's say the next 6 to 12 months, I can see AHT getting to 16 bucks. That would represent over a 31% potential gain. And talking about dividends, they pay a 3.9% dividend, so that's a nice added bonus.
I love
Okay.
that.
Thank you all for that. And check out some other articles that these folks write, as well as our other strategists on Zacks.com if you're not there already watching this video. Check back often because they change often. With everyone here, I'm Terry Ruffalo.